everyone. Thank you for joining us today. Today, we're going to cover the topic of cyber liability insurance demystified. What to do when a cyber breach has happened, and how can you protect yourself in advance of this type of event occurring. Today, we have with us Ms. Dharani Fernando, the COO of LOLC General Insurance, to speak to us on the topic. Ms. Dharani, I'll let you take it from here.
Thank you. So tonight, this evening, what we're going to do is we are going to try and demystify what cyber insurance is all about. When I meet bankers, when I meet heads of financial institutions, they always want to know what is it exactly that is covered, because the wordings can be, or the policy can be so complicated with lots of jargon. So my objective is, this is not a sales pitch, but my objective is basically to make everybody understand what it covers, hopefully in a very simple way, and what it does not. So just to get our bearings right, the slide share. Okay, sorry about that pause. So basically, to get our bearings right, we have to understand what is exactly insurance. So I hope everybody can see the slide. So what insurance is all about is it provides protection against financial losses by pooling the resources of many. So this is basically the concept. So if the risk of loss can be spread over a large enough group, a large enough group, the effects of the loss to any one individual can be minimized. So if you simply take a motor policy, that's how the concept works. Everybody pools the insurances of the motor policy in a pool, and then the probability is that everybody in that pool is not going to meet with an accident every year. Only a certain percentage will be meeting accident, or they will suffer any losses. So the pooling of many makes it very viable for risk sharing. So this is the basic concept. Any problem? So if you look at cyber losses can come in many forms and in many ways. It will be physical damage to the software, to the data that a company can be holding. It can be business interruption or loss of profits because you're unable to work your systems. It could be liabilities because you're holding other people's information, and if it's abused, if it's misused, if there's a hack, then third parties can sue you. Then also reputational harm. How are you going to manage that? So these are some of the cyber losses, and we are not saying that insurance is the total solution for cyber losses, but it can definitely mitigate certain expenses incurred when you have a loss. So just let's track a little bit how the concept of cyber insurance has evolved. It actually started way back in before the year 2000. There were concerns that there will be issues with systems when it reached the point of the year 2000. So there was a clause which came in, which was called Y2K in all insurance policies. Cyber liability policies, as we know now, was mostly developed at Lloyd's of London in the early 2000s. And from 2000 to 2010, the demand for cyber insurance, especially in the US and the EU, it started increasing because of massive data breaches. Then also, lots of corporates and institutions hold personally identifiable information. That is your their passport numbers, credit card numbers, social security numbers, all which are highly valuable to hackers are held. Insurance companies, hospitals, they hold vital information about various people. So if you hijack this amount of information, obviously it can be very lucrative. In 2014, TJ Maxx announced that in 2007, 45 million of their credit cards were compromised. The breach cost the company something between 1 billion and 4.5 billion. Now, these are not clear because not all these are disclosed, but they had 25 class action lawsuits settled in 2014, paid out $177 million as third-party losses. And 2017 onwards, cyber insurance products came into the mid-market and the retail market as well. Now, the issue or the concern with most people who consume insurance products, cyber insurance can come in all sorts and in all forms of ways, because you have major lead players, insurance players like Chubb, AIG, Allianz, and various companies, and they come with varying wording styles, scopes of coverage, and various definitions. So there is no current standard as such, unlike in a motor policy, which is easily understood if you take any motor policy anywhere in the world from any of the insurance companies. So that standardization is yet to come. So it can be very confusing for a client when you start reading cyber policies. Also, another milestone in the evolution of cyber insurance was the regulations that came in, especially in California, to close existing data breach notification laws. So if you are a corporate holding vital information like passports, government IDs, biometric data, and if there is a breach in your system, you have to notify it to the law enforcement authorities. So these are some of the milestones or key events that have prompted the development of cyber insurance. A key case was actually Starwood or Marriott Hotel, and their hack goes back as far as 2014, and it was only detected in September 2018. About 500 million customers, their details were stolen through the systems. And so what happened was, it's a very interesting case. There's lots of information on the website. It eventually turned out that this 500 million customer details never came to the dark web for selling. So they found out after investigations that actually this was a Chinese government hacking into the Starwood hotels or Marriott hotels. And then you might be wondering why Chinese government might want to hack into the Marriott database. So it was found out that Marriott is the preferred hotel for all US government employees, government employees, and even the army and the naval forces. So because of that, the Chinese government was very, very interested in hacking into the Marriott system. and also the because of the GDPR rules, Starwood and Marriott may face significant amount of financial penalties going even into the future. So let's talk a little bit about the type of covers that are there. There are two types of covers in cyber liability insurance. The one is the first party, which means the insured in the policy is covered, and the other is the third party, where you are liable for legal liabilities sued by various people because of negligence. So in the first party portion, and first party is generally more popular in Asian, European kind of countries, and of course the third party angle is more used, widely used in the US. So first party coverage, basically the cover or the policy holders are covered against damage or losses suffered to their own property, their own data assets. And there are a couple of areas which this gets a little bit technical. I try to simplify it, but if you oversimplify it, probably might not get an idea of what is actually covered and what is not. So under privacy notification and crisis management costs, the cost of performing computer forensics to determine the existence, the cause and the scope of a network compromise or data breach is assessed. That part of the forensics and any investigation costs are covered by the policy. Then legal fees in order to determine the actions necessary to comply with legislation related to the data breach or network compromise is also covered. Then the cost of notifying individuals of the data breach, whether or not they are required, can be covered under the policy. So if you, I had an experience where a particular bank suddenly sent me a notice saying that my details have been breached. So I will be given another credit card with a different number. And when I inquired as to why, they said that their systems have been breached, and because of the loss of my details in their systems, they are replacing the credit card. And also when you have, like if you're a bank or a hospital, when you have a situation like that, you need to set up operational call centers to manage various inquiries. So the cost of operating those call centers to manage inquiries from individuals affected or even potentially affected by the data breach or the network compromise is covered. Then the cost of providing credit or identity monitoring and identity protection for those individuals whose personal data have been affected by the data breach or network compromise is also covered. The fees that you have to give a public relations or a crisis communication firm in order to handle the loss of reputation will also be covered. So the way that you cover, for example, the insured loss of reputation is that an insurance company cannot reinstate the reputation that you have lost. But what the policy can do is to provide reimbursement of expenses incurred for damage control. Basically, this is a major component of what covers in the first party section of the policy. Then emergency response costs. So sometimes when you have a situation, you cannot wait to get the approval of the insurer or the reinsurer. You need to, because like, for example, when a house is on fire, you need to do certain things. You cannot be calling the insurance company at that point in time. So there are emergency activities that need to be done. So under this particular coverage, you can do that, provided that it's reasonable and that it basically covers the necessary emergency payment. Another key component of this first party coverage is the extortion demand. And in Sri Lanka, we have seen like a recent spate of this particular situation. And the policy is generally designed to reimburse to the insured or the policy holder the sums paid in response to an extortion demand. Now, various countries look at this in various ways. In some countries, it's not allowed to pay extortion, and they're quite stringent on this aspect. So it depends from jurisdiction to jurisdiction. But if there is a compromise before the delivery or the transfer of funds, the insured has to report the extortionist demand to the police or a law enforcement authority. That's how you can actually transact the extortion demand. Then certain countries have very stringent regulation about notification laws that if you have a breach, you have to inform the regulator. So the insurer or the policy will pay the defense cost as well as the regulatory fines arising from a regulatory investigation into the matter. Another one, which is another key component that is covered, is the business interruption. So the policy will reimburse the insured for loss of profit and any operational expenses during the period of restoration directly caused by a network compromise, which has been caused due to a partial or a total network interruption, or it necessitates a partial or a total shutdown in order to prevent a further loss. So during the restoration period, there is a certain amount of loss of business, and that aspect can be covered. The final section under the first party coverage is that loss of data. So the policy will reimburse reasonable costs incurred to update or restore the insured's electronic data, obviously from backups, which have been destroyed, lost, damaged, or altered as a result of network compromise, but only up to the level which existed prior to the network compromise. So that essentially, those 6 components basically cover the first party coverage. Then we go on to the legal aspect of it. So it's basically arising out of, this is a very legalistic thing. It's covered arising out of privacy and security wrongful acts by the insured. So it basically, if you're a bank and you're holding lots of PII information, personal information, and if there is a breach and there's a hack, and hackers get hold of data, and there is abuse of it, and probably fraudulent transactions, then the customer of a bank can sue the bank. So basically, once that is done, this policy will be can be used by the bank to recoup those losses that they have to pay third parties. So many companies, especially insurance, banks, hospitals, hotels, have information, and let's say anybody holding confidential customer information, let's say like an employee benefits company. They have personal records of employees of many companies. So one single breach or one single hack presents a huge potential for a significant amount of liability or customers suing various companies at any given event or situation. So another component of cyber insurance is common exclusions. What does it not cover? Because there are things which clients can expect the policy to be covered. For instance, like financial crimes or illegal transfer of funds using IT infrastructure. Now, these aspects are not covered by the cyber insurance or cyber liability insurance. So the common exclusions are property damage, obviously because it's the subject of another type of insurance. Bodily injury or death, it could be the same thing because you have life and personal accident kind of policies. Intellectual property, because it has different values depending on if it's like a medical research institute, they have certain intellectual property, and the value of it cannot be covered under cyber insurance. Even if there is a loss of data, or there is a breach, the policy will only cover to restore data. So the value or the intrinsic value of the intellectual property will not be a subject of cyber insurance. And betterment. So betterment means if there's anything done to enhance or improve the computer system or the quality of the data to a level beyond what was in existence prior to any network compromise or breach, that won't be covered. Obviously, war, terrorism, and looting, that is not the subject of this policy. Unlawful data collection and acquisition or retention of PII information is not covered. Some regulated companies can hold sensitive data, and certain types of companies cannot hold other people's sensitive data. So unlawful data collection obviously is not covered under this policy. Crime or fraud, any probable criminal, fraudulent, or dishonest act is not covered. Any intentional violation of laws are not covered. And financial crimes, including using IT infrastructure, is also not covered. Asbestos is a standard exclusion for all types of policies. Then failure to enact proper security measures in your systems, which could have been reasonably foreseen, that will not be covered. Any conventional systems, any conventional security programs that should be running, if it's not there, then there is a possibility that the claim or the loss will not be covered. Core internet failure. So that is core internet infrastructure failure of any core element of the internet, telecommunication, infrastructure, GPS, DNS, root servers, satellites, any of these things, any failure on this will not be considered for cyber insurance, because it's beyond the control of the insured or the policy holder. Yeah, so various unethical business practices arising out of any actual or alleged antitrust violation, price fixing, unfair competition, anything relating to that will be exclusion. Then any kind of contractual liabilities, unless it's specifically, unless it's agreed with the insurance company, unless it's in the policy stated, then it will not be covered. So if you have various third-party service providers, you have to make sure that's stated in the policy. Because if it's not there and there is a claim arising from due to a third-party service provider, then it's not covered unless it's stated in the policy. Various kinds of employment practices, directors and officers policies will not be covered. Any kind of prior acts meaning prior to the commencement date of the policy will not be covered. Any dishonest, intentional, illegal, or reckless acts are not covered. Insured versus insured is directors versus directors. So you cannot, so if it's a corporate, if there are multiple directors, one director going against another director, that kind of thing is obviously not covered under this. Any kind of financial guarantees, force measure, any unforeseen extraordinary circumstances, including power outage, infrastructure, or network failure, over which the insured has no direct control, is not covered. Any kind of gaming and lotteries are not covered. Acquisitions and sales, like acquisition of a new subsidiary or a new associate company, unless it's been informed to the insurer and it's specifically endorsed in the policy, it will not get covered. Any kind of electrical failure, including electrical power interruptions, surges, brownouts. Brownouts are low voltage, or even blackouts are not covered. Anything to do with electromagnetic discharge is not covered. These are actually common to most cyber insurance policies that I have seen. Licensing fees, royalties, pollution, that is environmental pollution, shareholder action, supplier disputes over profits and things like that. Anything connected to that will not be covered. Any kind of unlawful activity, wear and tear, it's not covered under the policy. So that's quite a list. But just wanted to, in this particular session, wanted to make sure what is covered and what is not covered. So hopefully that is clear to you. So generally in my company, when we do cyber insurance, we generally go with the first tier cyber insurers or reinsurers. These are guys who really understand the business and who have over a period of 20 years, have developed this policy to the current level it is. And those are guys like Chubb, AXA, AIG, Travelers, Beasley, various Lloyd's syndicates, Munich Re. These are the top guys. So basically they hold nearly, even to date, they hold about 70% of the market. So if you're talking or negotiating with the insurance company, you have to make sure who are they reinsured with. So it has to be like a high level reinsurer who's behind your program and who really understand this policy and how it works. So the key drivers for the growth of the cyber insurance business has been in the last few years, and especially because of high level breaches of PII kind of information, especially especially in the financial institutional sector. Cloud computing also has driven, and to protect the balance sheet and bottom line is another reason why people purchase cyber insurance. Like I said initially, cyber insurance does not stop cyber attacks, nor is it the total solution, but it can help you to mitigate some of the costs that are associated with when you experience a cyber attack or a cyber hack. So obviously new technology that has driven regulation, especially maybe not in Sri Lanka, but in the US and in the EU, there's like high level of regulation, high profile breaches. GDPR especially have increased the demand in Europe, and of course the costs involving the data breaches. Like I mentioned earlier, the Marriott, I think up to date, it's nearly, it has paid over about 200-300 million rupees on the dollars on the Marriott case. So the key requirements. So how do you approach to get cyber insurance? One is the application form. It's quite a lengthy application form, and you have quite a bit of sensitive information that you have to disclose. It's very sensitive, so sometimes clients, especially in Sri Lanka, we have come across, they are not willing to divulge all the information. So the more information you have, the better the coverage and the proposal that you get. The less information you have, we have, especially in the last couple of weeks, we have experienced reinsurers are not willing even to give a quotation. And another really important thing is material or relevant information to that business has to be revealed. If you don't reveal, and at the time of a claim, you come across that there has been a certain aspect of your operation which has not been disclosed, the chances are that your claim will not be entertained. So that is really, really important to divulge information. And generally in an insurance company, it will be a handful of people who will be handling cyber insurance, and they will be very sensitive to the requirements of various clients, especially on the sensitivity of information aspect. Then also there will be what you call an excess or a deductible or a retention, where the insured or the policyholder has to bear. Now we have seen, especially post-COVID, we have seen prices, the pricing has gone very, very high. The loadings are very high. And in fact, there is, we have also experienced cropping of cover. I'm telling you the situation as is. Reinsurers have kind of pulled back a little, and they are very critically, they are evaluating the information, whether they want to whether they want to provide a proposal for a specific case or not. And deductibles, I have seen it increase from about $10,000 overnight to about $100,000. So yeah, so that in a nutshell, that is what cyber insurance is. So there are, just to sum it up, there are two aspects to the cyber insurance policy. That is the first party and the third party. First party deals with the policyholders or the insured's own data property. Third party aspects deal with the legal liabilities that come out of holding third party information in your systems, and then a list of exclusions that we went through, so that there is no confusion as to what is covered and what is not covered. And then also the key requirements to get a proposal from a reinsurer, because if you take in Sri Lanka, we don't underwrite cyber insurance policies. What we do is we collect the information, we put it together, and generally we have we approach reinsurers for this situation to get a proposal. So that's how the system works at the moment. So if there are any questions, I will take it.
Yeah. Hello. Hi, Dharani.
Hi.
Hi. Thank you very much, Dharani. So I'll get into the questions.
Yeah.
So we have one question. If somebody wants to get the cyber cover, what's the process?
So the process, if you come to us, basically there's an application form. It generally runs into about anything between 5 to 10 pages. So there's quite a bit of information that has to be divulged. So that's the starting point. So once we get that information, we will evaluate the information to see whether that is adequate. And if it is not adequate, we will go back to them and then put it together and basically send it to the reinsurers. So reinsurers and us, we will do a joint process of getting the proposal out. Okay. But basically it's information.
Okay. So Dharani, what's the best case time window we are looking at to get a cyber cover?
Provided that all the key information is given, it could lead to about a couple of weeks, because there is a tendency for a lot of clarifications to go up and down.
Okay. We have some more questions. So the second question is now, having something like ISO 27001.
Yeah.
Does it help you to get the cyber cover?
It's definitely a minimum standard, I would say. A minimum standard, because if you don't have any standards, then it will almost be impossible to get a quotation or a proposal from a reinsurer. So the more standards that you have, acceptable standards that you have, then the process gets a little bit more less tedious.
Okay. Dharani, now when you say, okay, when you take organization on board for the cyber cover, now
Yeah.
is there an assessment process? Now you said you do the assessment together with the reinsurer.
That's
So,
right.
I mean, do you get involvement of a third party to come and assess Sri Lanka, or do you have people in Sri Lanka to assess the organization?
Okay, so once a reinsurer kind of assess the proposal, they will figure out whether they want to go for a further like a risk report. So yes, there are two ways of doing it. Yes, if they are there are certain organizations in Sri Lanka that you can get it done. If it's like maybe a very large national infrastructure project, then the approach might be different. Then somebody from one of their known parties, risk firm will come and do the assessment. So it depends on the size. It depends on the value that you are looking for. So US $1 million will require less onerous, risk inspection activities than something like 100 million US dollars. So it depends on the case size.
Okay. Dharani, we have another question now. Say, imagine you have actually been impacted due to an incident, say
Yeah.
something like a ransomware. So attackers are asking for a ransom.
Yeah.
Can ransom be paid from this cyber insurance cover?
Definitely, there is provision for that. I mean, that's a major part of the policy. But then there are different. I mean, how you get about it, there will be a process and an approach to that. Because in some countries, it's not allowed. Your regulation or your rules of the country, regulation of the country or the law of the land does not allow you to do that kind of thing. But sometimes policies kind of overlook those. It depends, but there is definitely provision for that. Yes. So, but only thing is before the transfer is done or the delivery of the cash is done, depending how you want to transact this, you have to tell it to the police. You have to make the police entry. You have to go through that process, and then only you can pay the ransom.
So the reinsurance or insurers will also be doing a.
They will be involved in the whole process. Yes, I mean they will be monitoring how it's done, and you will get expert advice, especially from reinsurer point of view, because there is a whole from the forensics to negotiation experts. You get various services that come from reinsurers.
Okay. So then other question, next question is now say you actually imagine there's a breach. So there are companies who do this incident response.
That's right.
So can an organization hire incident response team, and can you pass that cost to the cyber insurance?
Yeah, definitely. That is part. The expenses are covered. Yes.
Okay.
The expenses to mitigate. Yes, I mean to look into it. All the expenses are covered.
Okay. Darren, next question is actually probably without revealing the name now. Have you handled any incidents in Sri Lanka?
No.
Unreported. Okay.
Yeah.
So as far as I know, there are no, say for example, many people who are in this Zoom, or rather on this video call, are representing the financial sector, top 50 companies in Sri Lanka. Are there any regulatory requirements for cyber so far?
No. So what from an insurance company point of view, what you have to do is you have to file the product that you are selling to the regulator, so they have a fair idea of what you are giving the client. Any new version of the product, we file it with the regulator. So that's basically the regulatory aspects of what an insurer has to do. Does that answer the question?
Yeah, I mean, we were looking at now. I know there are no regulatory guidelines saying that cyber cover is mandated. So for the sector, there's no such thing. I'm just asking, in other countries, are there any countries where it's a mandatory requirement to have a cyber insurance? Are you aware of any countries?
Not really, in the sense, I can't think of any, like if you're a retailer or no, I think it's an option that you can exercise. As far as I know, I don't know any in any jurisdiction where they say you have to take cyber insurance policy. I'm not aware of it. I might be wrong, but I'm not aware of it.
Okay. So there's another question, Dharani. Does the insurance involve to negotiate with the threat actor? Probably he's asking the same perspective as say in the ransomware incident.
Yeah.
Does the insurer do they get involved in negotiating? Now, say for example, these ransomware guys may ask for a 100 bitcoins. So
yeah.
Does the insurer gets involved in that negotiation process?
Probably not, but they will probably monitor the approach that a company will take, and you can get expert advice, but I don't think they will get involved as such.
Okay. Okay. Next question is already now actually okay. So we have seen number of cyber related attacks. We saw the number of attacks during COVID period increased. So
yeah.
we had a similar situation in Sri Lanka.
Yeah.
So I mean, does that actually result in you getting more cyber business? So I mean, were there many cyber covered? Was there any interest?
There's definitely inquiries and there's definitely interest. But I think probably they find giving the information very onerous. So that tends to become like a bottleneck maybe. Yeah. So because probably even you have seen Paracom application forms ask for detailed information, you know. So sometimes maybe companies are not comfortable about giving all those information, but there's no other way to get the cover unless you give the information. So it's like, you know, that's the kind of situation you're in.
Okay. The next question is already now many people in here, they are from, I mean, they are basically either CIOs or people who are running IT departments or the security guys. So right. How do you go and justify this to the board, cyber cover?
Well, yeah, that is a good question because our boards exactly don't understand the cyber situation. In order to so it's basically probably only like, how do you say, like educating, I mean, for a want of a better word. So you basically have to say, this is what is covered, this is not what is covered. I think that has to be very clear because when you say cyber insurance, both think, okay, anything and everything with related to cyber attacks are covered. But the truth is, that's not the case. There's a scoped out area where the insurers or reinsurers are willing to provide cover. And then there's also an area to which they are not willing to give cover. So that has to be clear. Yeah.
Okay.
So it's basically talking to the boards, giving them feedback, answering their questions, and telling them very clearly what can be done and what cannot be done.
Okay. Viromal, you have any questions?
No, I'm good. Thank you.
Okay. Dharani, next question is now say, now this is actually something I'm not sure how you can relate to this. So during this COVID period, now most of us have been asked to reduce our expenses. So in an environment like this, now cyber, somebody or the board may see this as a sort of a, you know, last line of defense. So how do you still go and convince board during this time? I mean, this kind of in the like challenging time like this to spend money on something like cyber.
Sure. So if you're, yeah.
I mean, from an insurer's point of view, like how do you really go and sell it to the client? Probably the IT folks can use the same approach to sell it to the board.
Probably give them some examples, like the Marriott case, like the TJ Maxx case, you know, the impact. Because like you always say, we don't know when an incident might occur, but the chances, the probability is increasing. So there is a great, so there is a chance that you will be, you might be attacked. So basically, if you give a couple of examples that are in the market, whether it's Equifax, whether it's Marriott, TJ Maxx, Target, there are so many cases basically that you can say, okay, as an example, the amount that they pay as first party losses, even just on forensics or just giving the ransom value, that itself will take care so much of the balance sheet, the bottom line. So it's like in any insurance companies, and the attitude to insurance, even in a motor policy or a health policy, once you pay the premium, people want to kind of, make use of it. So if you don't have a claim for that particular year, it becomes an issue because they feel that, the public feels that, especially in, our part of the world, okay, I have paid money, but I haven't got anything, so it's easy to sell, cell phones and laptops and clothes and things like that because you can touch and feel. But here you're selling something, you're giving protection, but you can't touch and feel that. So it's a bit of a challenge, in certain markets to make them feel, okay, you are actually paying for something, but only thing is you can't touch and feel that. So only in the event of a situation, you drive your motor car, right? You don't expect somebody to come and, crash to it, but then it happens. When it happens, you get the shock of your life and you are so thankful that you have the insurance. So, but if nothing happens, then you're wondering, why did I pay so much? So it's something like that, a chicken and egg situation, So best example with boards is to make them understand by giving a couple of examples. Is that okay answer? Okay.
Dharani, there's now say some organizations, they run things like payment platforms, many banks in Sri Lanka. So with this, can we cover any frauds occurring through those payment platforms?
Frauds as in actual financial transactions?
Yes. Now say, for example, customer comes and say, okay, somebody has transferred money from my account using this or something. So can cases like that be covered from the cyber?
Financial crimes are not covered in this particular cyber liability. Yeah, it's actually quite challenging to, for our market, it's a bit challenging to get that cover. It is there, I won't say no. It comes under financial crimes, computer crimes. But depending on the value, if it's a small value, an insurance company might take it. But when the values are larger, depends how much it is and how vulnerable at the moment the systems are. There's a chance, that it's quite tough. Unless you're willing to pay premium. So the thing is, if you're willing to pay, these are premium products, so it can be very expensive. I won't rule out, but it's challenging to get cover from the international markets.
So now over the years, there is a change in how reinsurance react. Now we see these days there are a lot of attacks. So do you see the way the reinsurer market or insurance market, is their perception changing, or how do they really?
Yes, I think especially with the COVID, we are experiencing that reinsurers have become a little bit slow in this area. They are re-evaluating their risk appetite for liability, and we have seen certain premium increases, deductibles or the excesses or the retention that the insured has to bear increasing. Certain types of conditions have come in, so we have seen curtailment in the policy. Yes, we have seen. It might change in the future, but for the moment, it's a little bit it has become what you call it's a hard market.
Okay. Dharani, next question is actually we have this would be the last question. So in compared to other countries in our region, maybe countries like India or Singapore, do you see any major differences in Sri Lankan market with regard to cyber insurance?
Personal experience is yes. In terms of how do you say, this is not a insurance wise, this is not a very mature market, and it's very price sensitive. So sometimes it's not a very viable market for reinsurance because you need volume in terms of the number of cases and also the value of the business. So if you take for instance cyber, there's only a handful of companies that have gone for this cover. So yeah, so it's a little bit, it's a challenging market, I would say.
Dharani, that's about it. So do you want to leave us with any final thoughts now with us? I mean, whether now, I mean, people who really want to go about it, what are the main things we should look at, or you advise any specific sector? Okay, maybe this sector, you see a trend in insurance markets worldwide, for example, maybe we see a number of attacks on the financial sector increasing. So what are the final thoughts you want to leave us with?
Yeah, so final thoughts would be, I think cyber insurance will be like a base product in about 4 to 5 years time. So at least start talking to an insurance company and start having a dialogue, get a couple of proposals, get familiar with it, try and see, try to understand what is covered, what is not covered, try to understand what is relevant for you, what you want covered, because obviously there are things that everything cannot be covered. That's an issue. So you really have to understand, and the only way to do is to kind of educate yourself as to what is covered, what is not covered, so that you can have a better handle on negotiating and getting a better deal. So if you have an understanding, then it's so much easier to negotiate and get a good deal, not only in premiums but also on the terms and the conditions. Just because you get a good value, the moment you get a good premium, sometimes your terms and conditions would have hardened, or it would have got more stringent. So to balance it off, because the terms and the conditions will kick in, or you will only kind of sense, or you can only experience it when you actually have a claim.
Okay, Dharani, I'm not sure whether you had time to run through the agreement. There is this one particular antivirus vendor.
Yes.
This is actually last question, I think. So when we actually sent you a flyer among the group, one question we had was, okay, now we have products like this also, where there are some vendors, probably they may be really very sure of their product. I'm not really sure about the reason, but
right.
Do you see any difference between how that agreement is structured and now if you have something like this, would you still need a cyber cover?
So this will only cover a certain aspect, right? This doesn't cover like data breaches and the expenses that you incur for forensics and legal and to restore the lost information or the breached information or the corrupted or whatever compromised information. So this is basically only covering ransom, right? If I'm made to understand. So it's only one component. So and it's not very this is just a kind of a marketing brochure kind of thing, but you can actually tell what they actually cover or not only when you see the small print. So it's like the travel insurance in a credit card. Okay, they say you get free travel insurance, but once you purchase it, you know that there are certain terms and conditions. So generally in I don't have the experience in cyber, but in other areas, when you give something like that, there are certain restrictions. So you have to kind of, check on that exactly to what extent are they kind of, willing to provide that kind of a guarantee.
Okay.
Unless of course they're so sure that, money back guarantee kind of thing,
Okay, understood. So we want to thank Dharani. So despite the busy schedule, coming here and actually sharing your thoughts on cyber. I want to thank South Asian Technologies as well for hosting this event.